Good evening, everyone. Welcome to Closing Comments here on December 9th. Let's jump right into our charts and see what happened in the markets today. First up, we got our February live cattle. Continue to see this live cattle market balancing out here in about a 2-day range. We did see the bulls briefly poke up into a new 20-day high as we see them trying to get this trend reversal underway. However, this market did push it back inside that prior day's range, finishing the day almost unchanged here. 2-day balance period here of the Monday and Tuesday's action. A little bit of resistance continuing to show itself here right around 228, but this market is just kind of hanging steady here, trying to get more people on the bull side and get this trend reversal underway. If the bulls are able to keep this momentum or get some momentum rolling early tomorrow, bids above 228.60 should have them pushing up here towards this gap, and which starts here at 232.5. Try and fill that gap to the upside and get this uptrend rolling. However, we continue to see some resistance here, and we may need to see a little bit more of a pullback to pick up some leftover buyers from these value areas before really confirming that breakout. If we do get some offers down here below 225.65, which was today's low, we could see this thing start to flush back down towards either this 20-day moving average that's starting to turn higher, try and find some support here. If it does push down here through that 20-day average, we could see anywhere between 215 and 220 trade as we try and pick up some leftover value area buyers from the prior week. In the meantime, if we do start to trade down here below these prior day lows, I encourage everyone to be patient, be cautious, and let the market settle up, balance out before getting involved to the upside and commit to a new uptrend. But we would like to see the bulls try and find some support anywhere here between 215 and 222. And if we do see this market balancing out and showing signs of a higher low, be a good spot to start to look to the upside here and see if this market can get a nice trend reversal going into year end. However, that's something we want to slow play and wait and see how that unfolds. Not step in front of this thing if it does start to chunk lower here below these prior day lows. So remain patient here. Let this market really give a good signal and a low risk trading point before we commit to either side here. But in the meantime, this market has balanced out up here, and these overextended levels off of this prior Thanksgiving week low, we could see a little bit of a pullback here to give the buyers another chance at some of these lower prices to turn this market higher. Still good signs of a potential trend reversal here. We just want to see this thing really confirm with a little bit more structure or a nice strong breakout here above today's high at 228.60 to get that upside rolling. In the meantime, we could see a little bit of volatility if we start to trade down here below these prior day lows, so I encourage everyone to slow play it and have a little bit better structure and some better lines in the sand to trade around. Over to the feeders now. January feeders and March feeders both still in the process of rolling over into this March contract. We do have our new pivot points here that are tied to this March contract, so 330 being our bear pivot and 333.5 being the bull pivot. Bulls need to get some bids above the current week's high as well as Friday's high there to really get this upside underway and try and fill this overhead gap. In the meantime, we could see a little bit of resistance like that live cattle market up here. A little bit of a pullback to some of these value areas would be a good spot to pick up some leftover buyers, give that strength they need to really push this thing higher. In the meantime, this market is putting pressure up here right around this 333 to 335 area. Look for the bulls to keep on pushing and get this new uptrend rolling. Jumping over to the corn futures now, this market just continuing to chop up here in the 440 to 450 range. Yesterday's action being reversed as this market did close above Monday's high, but we still should expect to see some resistance up here around 4.5. This corn market doesn't look to be in a hurry to go anywhere, so expect this thing to continue trading range bound here. Not a whole lot else to be said. Look for that choppy action to continue here in this corn market. Crude oil prices continuing lower with yesterday's breakdown. We continue to see good rejection off that 50-day moving average like we've seen for the last month or two. Good way to start the week from the bears here with that breakdown. Expect to see this thing just keep on drifting lower here as the sellers are in control, and we should see the bears start to target the mid-50s here and keep this market moving lower. Next up, equity indexes on the board. We did have the S&P finishing a little lower here today, but with an inside day still showing supportive action right around this prior week's range. Not a whole lot of directional moves here. We did have some divergence here amongst the indexes. The Dow did start strong today, but finished with some weakness as it did flush back down here and finish the day below that prior day's low, which did bring the S&P down with it. However, the NASDAQ did kind of finish the day off of the lows as there has been a little bit more strength here during today's session, keeping this market propped up. Each of these indexes still just kind of chopping up inside that prior week's range. Expect to see that continue into tomorrow's session. We do have the Fed Day interest rate decision and an FOMC statement tomorrow, so that should give this market the spark it needs to push either way. 68 and 6900 are the pivot points this week. If we do get a nice sharp break off of that FOMC statement tomorrow, I encourage everyone to be cautious and get defensive once again if we do have a sharp break down here below 6800, and wait for this thing to settle up and offer some better risk points. But in the meantime, if this market does get a nice breakout with a push tomorrow off of that FOMC statement, and we see this thing rally above 6,900, that could get this uptrend really rolling back towards those all-time highs. Just going to have to wait and see how this market responds to that FOMC statement tomorrow. So in the meantime, draw your lines, get defensive here if we do start to trade down here below that prior week's low. But we do continue to see some constructive action out there and some good opportunities in some certain industries. Continue to stay selective and remain long and strong in those relative strength names. But in the meantime, we could see a little bit of volatility here based on that FOMC statement tomorrow. Just have to wait and see how tomorrow's action finishes, and that should confirm the next leg out of here. That's all we got for tonight. Thank you, everyone, for tuning in. We'll catch you guys tomorrow.